Good afternoon, everyone. Welcome to today, Thursday, May 29th edition of Trading Trends. Coming at you today with the stock edition, and there were some movers today. We will take a look at the macro market in terms of SPY, where we see things going forward over the next short term, 2-3 weeks for the overall markets. Finally, getting a little bit, more constructive after this kind of digestion that's happening in the market. Like I said, we'll look at single stocks today, and we'll get into it. It's been a kind of a busy week, so apologies for the cadence kind of thrown up in the air this week. It went to Metallica twice this past weekend. Absolutely incredible. And that's why you don't be skeptical, because there could be bands like that or stocks like that continue to run for decades and decades. Metallica, in their case, 45 years and still playing sold out stadiums. And you can have companies that run further than you think. Should a band or a stock do that? Probably not, but there are the few that make it, and that's where you get your relative strength. Rock on Metallica family. It was a great 2 days, and Limp Bizkit absolutely crushed it when they were doing Nookie in the rain. It was pouring, and everyone felt like that we were 18 again until, of course, the next morning. My ankles did not feel the same. Okay, today's single stocks, we'll get into it. A lot of earnings are still going on here. Obviously, the big one, of course, how could we not talk about NVIDIA, up 3% by the end of the day. We'll take a look at it. Not in terms of the breakdown of stocks, because it really wasn't anything notable in terms of multiple standard deviation moves, but we will. My background's all messed up. We will take a look at the chart, at least in terms of ramifications of what it had on the marketplace. There we go. Best Buy, Hewlett Packard, and Arista Networks down 7%. Big moves going the other way. Some tariff related, some directly to earnings as well. And then we'll get through the day. All right. So for off, thanks again for joining. Let's do the screen share here. Boobity boppy, that's me. What else? All right. First off, don't want that. All right. So here's the SPY chart. We'll get to that in a second. NVIDIA, like I said, up 3%. Not going to go much more into that, but the stock does look nice here. It's finally bounced back. We did not like it, obviously, at 99. It looked very weak there, but it's based, and now it's forming some strength. It traded as high as 143 today to close at 139. Salesforce was a big one. I think we're actually going to take a look at that. That stock does not look good. I think that it is on our list. I'm not sure, but we'll take a look. And the rest, a lot of inside moves. I'm going to look at some stocks that really did move. Here in terms of the intraday, so here we open, and they sold off immediately. Not drastic, but they did continue to sell. You see this orange line, or volume weighted average price, continued to go lower and lower. We bottomed finally around that European close at noontime here. Touched as low as 586, or roughly almost a full percent away from VWAP. And then they bought that bottom there. You can see a bearish, it's very short time frame, of course, but a bearish divergence here. We did not get a lower RSI on that low print, and it provided us to have a small bounce to where the 200 bar moving average, each one constituting 30 minutes here. We closed at VWAP, essentially. So as I zoom out here, I remember before saying, the markets were going to finally base and whatnot, and trying to get towards that 575 level thereabout, and see if we want to hug the 200-day moving average. Again, today markets were up about 40 bips. We closed at we're just going to round here and call it 590. We are about, $14 or 33% above a slowly rising 200-day moving average. I still think this market base is right around 576. I do think it holds that 200-day moving average, and this was an ugly period in time due to tariffs and, potentially what the Fed's going to do and the rate move. March 7th through May 12th now, it was looking like a time capsule, a period in time where we were in a phased bear market, and now we have, as of May 12th, resumed that uptrend. I believe, like I said, over the next week, today's Thursday, I would say, by mid next week or so, we should base around that 576 mark. I do think it holds. Maybe potentially nicks it by $1 or so, but I don't think so. And then that's going to be your buying opportunity around that 576 in SPY. I believe the next target is right around that 597, very close to 600, which I think we get to probably like early July or so. Maybe it coincides with America's birthday. I think Trump's having a big party and whatnot. So it could be a lot of animal spirits and whatnot. I think we talked about this actually 6 months ago before the bear market and whatnot ensued. Let's see if it's still in play. Markets are very strange like that. They will give and take away in terms of the timing, but you're still right overall, and that's what especially hurts on the trading side. So that's what I think on SPY. Things are looking constructive. I really do like the way the market has looked based on many factors: flows, the strength of closes since this May 12th. Just really, really nice trading since then. A nice, again, they bought it here, the 200-day moving average. That was your chance. May 23rd, 6 days ago, we tapped the 200-day at 576, and here we are now at 590. Let's take a look at some of these individual movers, because boy, have they been moving. Today we got some big ones for you. A lot of, I'm sure you guys are in these names. They're popular, especially today. So C3.Ai, they had earnings and also a huge deal with Baker Hughes. A big deal, I think like $300 million or something. This one looks good. Again, the stock performance or the stock videos are tougher because these are moving, a fifth of the market cap in a day. So these are very difficult. To be very frank with you, I like this one. If you asked me yesterday, I love this one. Purchases, again, I'm just putting my technical hat on, at $23 with a target of 26. Literally. But this catapulted here all the way towards 28, actually touched 30 even, and then rested and closed at $20 today, up 20%. A robust move. It's interesting here if this has a real sentiment change and goes above and closes above its 200-day moving average. I would rather, again, the ticker is literally AI, so that's the way folks are going to play it. I don't think we're done in that game. It did peak, right around the holiday time, December 10th, at $45, but I think there are worse names that you can be in than here. Again, I like setups around $20 and $3. You're at 28. There's volatility in this thing with a $1.20 ATR average true range on a $28 stock, so it'll move. Does look constructive here, and again, a major deal today with Baker Hughes. So that's AI. I wouldn't personally chase it at above 26, but there could be a little bit further momentum for this name. E.L.F Beauty, this one rocketed on earnings as well, and I think they had a deal with Bieber's wife, Hailey Bieber. I think they bought her company for $1 billion, and that's pretty big because now it's going to be a fifth, I believe, of this portfolio of E.L.F Beauty. So pretty big, or 15%, but it's going to be somewhat significant, I believe. So this one here, again, this one's been in a significantly nice uptrend from those bottoms in mid-April all the way down to $49. And now look at this, you got a double down to, again, so this is kind of emblematic of what I said before for the market in terms of always expecting a sliding 200-day moving average. Does that mean that's it and game over and Goliath, or David on Goliath and he's done? No, but it can take some time. Right here, I like this. This has been overbought since May 12th. Again, some things are really exhibiting strength from that May 12th market move. This was a thrust similar to the S&P, but much stronger magnitude. This had been a loser. Look at this. Long periods of oversold. Long periods of oversold. No reason to own this as of this earnings report from last August. And now here we are. The all-important 200-day moving average is at 102. I'm rounding. We closed at 111 on this these earnings. I think the CEO said something like the customers don't care about tariffs. You'd like to see this. This could be a turnaround signal. I just personally wouldn't chase this above like $95, even with the vol expansion. So I'd rather just sit this one out, see how it plays for the next couple of weeks or next couple of days to week. But this one absolutely rip roaring, even just since these $75 levels, May 12th. So E.L.F Beauty, congrats if you're in that one today. And this one only up 3%. But this is, I don't know why I skipped the futures. Boeing, this is a multiple standard deviation move for Boeing. Obviously, Boeing, a massively huge corporation, 150 bill. Here we go. New 52-week highs. The aerospace and defense sector has been on absolute fire, but that's like Archer Aviation now and Jetsons flying taxis type stuff. It's not an Uber. A lot of 21st century tech, but XAR, aerospace and defense, has been on fire. Boeing has been very good. It's been in a purgatory, I'd say, since Christmas through just that middle to end of April, and then really now it's got its legs underneath it. It was just basically basing during that purgatory, I would say, between 130 and 190 in a large range. But right here, again, I love this one for purchases around 195. This one ran up quite a bit, and to be frank, my fully targeted valuation would be right around 210. So it could have a little bit more to go in the short term. So Well, a couple of names have ran up quite a bit ahead, but the market overall looking constructive. Let's go to the losers and see what got rocked today. HP, let me see if that's the right ticker. Nope. Un momento, por favor. Why is this? Hold on, something's wrong with my sheet potentially. I think it's HP Inc. This one got hammered today, I believe. Ah, yes. Down 8%, HPQ. Yikes. So we all know Hewlett Packard. I think they had come out saying stuff about the tariffs were very sensitive to the consumers. These guys are massive. Nice balance sheet, too, in terms of a $26 billion market cap and a $54 billion annual revenue. Always like to see that. But the stock has been a sale ever since, again, when the Fed cut rates, things changed for HPQ. For what it's worth, it really began its significant downtrend. Earnings only cemented that in February, and now they had a similar case. Don't like to see that. This is probably going lower. These earnings lately have been kind of a way to cement stock's trajectory and path for the next quarter or so. I've been seeing it more and more lately. I know, ironically, that's the way it's supposed to go. To the downside, I like this one down to about like 25.5. So it looks a little bit overdone here, down 8%. It does look weak, though. Look for this one to base around $25, but I would not be a buyer of this one. Really no reason to own this in 2025. Next, Best Buy, tech, similar, discretionary, right? This one got hammered down 7%. So these are significant losers on the day. Best Buy, again, similar ugly looking chart. This one, again, like I was saying, especially with a consumer related story, folks really can tie in the narrative and just sell and then ask questions later. March 4th, they come out with earnings. People have no interest, obviously, not a great report, and they exit the day before. Look at the euphoria on earnings. August 29th, that capped the run and they exited. So earnings really do have power in the stock market, which is good to see. Down 7% today, Best Buy. I would look for this one to base around, again, $65. So this may have a tough couple more days for around 65. And then I do think it'll try and pop up to about $70. But definitely a weak name. No reason to own this since early March. And really no euphoria. They exited this name in August. And the next one, I know this is also a popular name, ANET or Arista Networks. This one got hammered today down 7%. So some big moves just outside of the Mag 7 and the big caps. Although these are large caps as well. This one I still think continues to go lower. I think this goes down to about $81 or so. I think this is not done yet. I don't think the new 52-week lows happen, but I think this starts to go lower towards $81, and then we start to see a bounce around 90. But this stock does not look to be in a good place ever since February 24th, which was basically days, just 6 days after their earnings really started to accelerate. And there's definitely better names that you can be in than ANET. All right, this is also one of my favorite parts of the show because these stocks are crazy. And this some names I haven't really seen in quite a while. This is surprising. I think many folks aren't going to buy this. The best mover to the upside or to the downside of the past 5 days, Advanced Auto Parts. So today down 8%, got absolutely hammered. But this thing is up 52% in 5 days, or an average of 10% in a day. Absolutely wild. Yeah, it was $31 and it touched all the way $53. This was a persistent short of mine last year. And you can see why this thing never even trying to make it a dash towards its 200-day moving average. Now, crazy, the earnings have propelled it from May 22nd. They're basically, I remember their earnings saying they're getting their butts kicked by Amazon, and there's no one shopping at the Advanced Auto Parts store anymore. This is good to see. Again, kind of a turnaround change. Most volume in a year. People are excited about these earnings, and it got overbought for the first time. People are lining up and saying, yes, I want to buy this. But now the candle happens. I'm not sure just how great that earnings was, but even objectively, I think we plug down and head back towards the 200 moving average. The slope and the curvature of the 200 moving average are very significant. It is good to see that starting to flatten. The more downslope it is, or upslope it is, it should more be feared and respected. This is starting to flatten. It's going to have a battle here at $41. I think it goes below it, but we shall see. Again, earnings have sunk this stock. Can this recent report on the 22nd, 7 days ago, be what resurrects the stock? We'll see. But this is the best place to be in the market in the past week, down 8% today. I think it continues to slide towards that $41, at $7. or nearly 15-20%. You can sell calls. I don't know what the $53 calls would sell, but you can sell those. And then you can buy puts as a hedge and hopefully make money on that. Or you can just buy puts. You can buy near this $41 put spread going out to July if those are listed. So there's a couple things you could do, but expect the volatility to be pumped. Oklo has been the second best plays. This is a popular name. This has been up 45%, so just a hair below Advanced Auto Parts in the past week. Oklo is that fission power name, nuclear name, $8 billion company. Chart looks very good all year. I would say really as of mid-October, this thing has been one of the best places to be. It did peak in February at $59, and here we are at $52, down 4% today. I think this just starts to trade towards that $38 mark. So that's going to seem like a heck of a slide. Again, just amazing. Overbought. You had the most trading in the stocks past year right here on an up day, up 23% on May 23rd. Wow. And now we're holding, we're starting to give back a little bit. I do think we start to give this thing back towards about $39 or so over the next 2 weeks. Had an amazing run. I think it's totally healthy time to digest some of these gains. It could not quite squeak out new highs there, and potentially we start to get this down towards $39. You could sell upside calls. You could buy puts. Just be careful. Again, all these are going to be pretty high vol. And then the next one, Ionq, the third best place to be in the market, up 29%. This thing down 9% today. So you're seeing these recent leaders start to give up those leads. We'll see if it's a show of the market as well or not. But yeah, this looks like it's got above its skis. I think this one trades towards about $35 to $37. Forgive the wideness of the range, but this is a crazy moving stock that's up again 29% in the past 5 days. We're average of 6% a day, down 9% today. A massive gap there, 37% a week ago. So all these stocks, if you recall, the computing quantum stocks ran absolutely insane with a lot of exuberance, a lot of volume on all the charts. But it's starting to give back now. And again, this one peaked back in January, right at the start of the year at $55 essentially. So I think this one starts to move towards, as I said, right around $37 next 2-ish weeks or so. Right here, trading 43. All right, top 3 losers of the past 5 days. If you were in these areas, you've been absolutely not feeling the love. Enphase Energy down 18%. This is one of the reasons I don't like solar. This is a major holding in the solar ETFs. And Enphase, one of the larger ones. This is a $5 billion company, although it used to be much, much, much larger. $10 billion last year, and I think the year before double. And they have some revenues, about $1.5 billion. But again, look at the chart. No reason to own these since September. So before the election, there truly was not. This used to be a Harris solar trade, and then this would sell off when Trump's back here, like in the summer, when Trump's chances would rise. I remember this. You could probably even see the assassination attempt on here. I think it's right around there. But anyway, I remember the solar trade. So this one, fresh off 52-week lows last week. Again, we're talking about the strength in May 22nd and all those computing stocks. They exited the other way. This was down 20% on the 22nd of May here. Don't like this one. I think this base is right around here. So it's trying to base right around that $37 mark. And then on a dead cat bounce, tries to get towards 44. But this thing right here, March of Death, doesn't look like much can save it. And the worst area to be in terms of stock in the past week, it just looks like an area that continues to get lower. This is a stock I don't highlight often. Trump Media is in my parameters this week because it was the second worst place to be in the stock market. This is a $5 billion company on basically no revenue, so $3 million revenue. So it's basically nothing. And it looks like the technicians have caught on to it in such a way. So this thing peaked, again, the week before. If you want to know when to play this perfectly, this peaked the week before the election at $55. I'm rounding. They do have earnings and such. But look at this. It taps the 200 moving average and starts to go lower. Oversold behavior. They really said, I want to get out of this February 24th. And technically speaking, no reason to own this as of January 24th, which was literally ironic. I think that was the week of the inauguration, last I checked. So, yeah, had a decent week then, and then really no reason to own. Now, what do we say happening in the next week or so? I think it bases right around here. I think this $20 level holds, and you do try to get a bounce towards $24 or so. But I do think that 200 moving average at 26.5 proves to be too heavy. And then the next one, PDD, the third place, worst place to be in the market. We were talking about this live as we did the chart report on Spaces this week. They had a bad earnings report. And this thing was flat today, up 40 bips. This thing down 15% over the past 5 days. I think it's basing here right around this $100 level today at $98. I think it'll base here and it'll try to make a move towards 111. The issue is the 200 days at 113, and then it'll probably get right, as I said, at best case scenario to then, and then start to just slowly start to descend. As you can see, as I was talking about the strength of the slope of the 200 moving average, this one's really not absolutely falling to the floor, but it is going from the left of your screen towards the right, and that lets me kind of know the descent to expect for this name going forward. So some names really having a character profile identification confirmation where it's saying this is as good as it gets, and then it's going to reverse. Others continue to power higher and higher. So for example, last thing, top 3 trades of the past 5 days, maybe unpredictable. Long Advanced Auto Parts, the best place to be in the stock market in the past week, with parameters of at least 10 million average volume and at least $1 billion size to exclude, crap companies and absolute small caps. Second best place was long Oklo, up 45%. I know a lot of people play that one. And then third, long Ionq, another computing name, up 29%. We'll be back tomorrow with a end of week recap. I'll be doing the ETFs to recap this crazy week. Peace.